every great fortune has been made by those who could see the future right before the crowd. And right now, there's five industries, five different sectors, from space tech to AI to robotics to defense and data centers, that are building wealth and specifically are inside of the AI boom that I believe are positioned for more growth. But here's the truth: even as we watch these opportunities rise, we're also factoring in kind of a broader market correction. And that's why inside our daily live trading sessions, we're not only trading these breakout names, but also capitalizing on some of the inverse plays. Like maybe it's the inverse of semiconductors, which we oftentimes trade when the timing is right. And here's what that kind of means for you: it pays to keep a little bit of extra buying power. While we're going over these top five stocks, even the strongest stocks can pull back. And if you're prepared, you don't just survive the corrections, you actually will profit from them. So we just wrapped up another great week of live trading where we did exactly that. And here's the big announcements: the lifetime access to the daily live sessions in Stockmate is ending this summer. And if you want in without paying any subscription fee, again, make sure to hit the second link in the description before it's gone. So we got five stocks. I'm going to tell you from the beginning as we dive in here what they are, the five stocks that could be some growth engines here in the AI boom. We got AMD stock, Black Sky, APLD, Symbotic stock, and BBAI. Now we're going to go kind of from what I would believe is surest bets in the near term to what would be from least to greatest. And that kind of looks something like this. So we're going to start it off with the first stock that is number 5, actually. It's going to be BigBear.ai. Now, BigBear.ai is recently had a push up about 4%. They've actually made a recovery of about 42%, up to $6 a share recently, as they have started to recover from what was a big dip since the sell-off in their earnings. Now, we saw them sell back down to this previous resistance level right here, previous resistance, that they actually ended up bouncing here at about $4.50. So now we're starting to see them potentially keep some momentum and try and make some recoveries. While the overall direction has been up and we see them building the market cap, there's still some things we want to look at from the contract perspective, the financial perspective. While we see the TSA release this new announcement here, it's a request for information. It could be a potentially $5.4 billion deal. This is a request for essentially building out their systems for AI-driven threat detection, remote screening, and also reducing the reliance on manual labor. This is a big deal, right? AI and machine learning into TSA, into where you go through the airports. And while BigBear.ai has maybe not had the best last quarter on paper, looked not so hot in the net income, we kind of determined the real actual net income negative was really about $10 million, but on paper it's a big loss there, with some acquisitions from also their building out of they had some offerings that they did, and they also did some goodwill methods there that you could see really brought their net income negative. But what we're seeing really is a balance sheet that's heating up. We see total assets rise to 600 million. And while the financials don't look so good, right? We see them increasing the revenue year over year. 2020 was 90 million, okay, 145 million in 21. Then you see in 2022, 155 million. Why they are one of the top 5 stocks isn't necessarily seeing that slight revenue increase, or even, that they've cut down their debt. Really what it is going to be their VeriScan technology. So they do have some Army contracts. They have some Pentagon contracts. They work with the Department of Defense, but they have this efficient traveler authentication, which is their VeriScan technology. Now, they've deployed this aggressively, rapidly into many airports, including Denver International Airport. They're in Chicago. They're in Los Angeles. They're in Heathrow. They're in JFK. And you see them deploying directly to the airports as well, this technology. So they're starting to build out infrastructure. And that's what we're watching with BigBear. And that's why we see more institutional investments. We could see, according to NASDAQ, BlackRock is a big holder, State Street and Goldman Sachs continue to add to their positions. And a lot of companies bought in bigger after the recent earnings dip. And one of the reasons why is maybe that they don't have the revenue just yet, but that they're looking at potentially expanding for what is the FIFA World Cup and the 2028 Olympics. So you can see this is a mega event. This is actually direct from their site on LinkedIn. So if you ever want to find us there on LinkedIn, you can find us there in the description below. But again, you got Kevin McAleenan, the CEO, saying, they're looking at these mega events as opportunities to potentially streamline some of the border security and the homeland security. So that's why they are number 5 spot. We see them here at this support level. Could they continue to sell off, maybe greater market direction, or even before they see the financials heat up? Maybe they do. Maybe we see something like this where they kind of sell back down and not make that full recovery. On the other hand, we saw them dip down to what was this overall trend they've had over the last year, where maybe that was the bounce they needed, that conservative, healthy pullback that we see. Then maybe this is kind of the move, and we get to see them slowly build this market cap back up into that $7 range to that $9, $10 range. They're a $2 billion company with potential to be in a market that would put them, more of like a $10 to $20 billion company compared to other companies like Leidos or the security providers that are similar. So they're an AI company, and we have them at number 5. Number 4 is outside of the defense and government contracts. You got BlackSky. So BlackSky is a company we've followed for a while, and just to disclose, we actually have long-term positions in all the companies here. But BlackSky has had a dip recently with the greater space tech market, and they sold off from a $28 high down to about $18 recently. We've kind of watched them closely because we have some positions in BlackSky that we were able to get back here around $12, $14 a share, and we're up about 39% right now. And they recently pulled back to this level of support. So this is a level of support that is special because it's a previous resistance level. So a lot of times previous resistance will act as a support when we're looking at a bullish momentum. So we see them pull back to this level. Maybe they can bounce here. It looks like a 26% increase, 15 to 30% increase really up in that $22 range. Or if they continue some of that uptrend up into that $30 price point. Now that's a 70% increase. So why are we watching BlackSky? And you look at the RSI, you look at the MACD, it's recently sold down and now indicating more of a buy. But they do have some reasons why, other than the technicals, we're kind of indicating they could be a good company to watch. They have contracts. And not only do they have contracts, they're working with international companies. They're working with a lot of governments. And they're kind of similar to Planet Labs. I don't know if you guys have seen these satellite companies that have the ability to see all of the, let's say, the boats, all of the tankers. Maybe you could see in BlackSky's case, I think they are touting that they're pretty good at tracking cars, even people, as well as airplanes, aircrafts, and maybe some heat signatures as well. And they have an AI focus. It's AI enabled analytics. And this is where the money is a lot of times it's in the hardware. And so BlackSky recently did a launch with Rocket Lab. So Rocket Lab is a company, end-to-end space company that builds rockets, and they're kind of a competitor with SpaceX. One of the interesting things about them is they use these carbon composite makeups of their rockets, which some people might say is going to be more expensive, but it's so light compared to steel that it oftentimes is saving them money by doing so. And so they are end-to-end. They launched their rockets, and why is Rocket Lab coming into the conversation? This is a video about AI. Well, well, I have a friend that works at Rocket Lab that I've known a real long time, and he's actually potentially working in some of the AI stuff that they got going on. They have their missions, and they recently launched a mission with Black Sky. So if you take a look here, it was called Full Stream Ahead. They launched the Gen 3 satellites that we were just kind of outlining a minute ago, and they launched a constellation. So they are launching a lot of different Gen 3 satellites here. And you could see that Black Sky's financials are actually heating up. So they got this interesting kind of approach. You look at Black Sky's market cap, they're at 644 million. But when you look at Planet Labs, I think they're maybe around 2 billion. You could look at some other comparative space companies, satellite companies. They're around 2 to 5 billion dollars in market cap. Well, Black Sky's at 644 million, and they apparently have a massive backlog of about 356 million dollars. They have 12-hour delay satellite imagery, which is pretty close to real time. And then they've had the revenue really increasing year over year. They've seen from 2020 just 21 million in that year to this past year in 2024 over 100 million. And then so far quarterly into 2025, they're on track to surpass last year's revenue too. So the balance sheet looks good. They got more assets than liabilities. Liabilities are a tad bit high at 160 million, 224 million as of recently, which is a little high, but not anything crazy for a space company. In fact, it's great to see that they got more assets than they do liabilities. So we look at the technicals, we look at the financials, kind of watching this level at $18 a share again. I'm going to be looking for potentially adding to our position here. We do add to our long-term holds, but again, we're looking for 15 to 30% swing up in that $20 to $22 range with risk management around that $17 price point or $16 price point, and looking for that margin for profit potentially of up to 70% if it holds true and space tech markets continue to do what they're doing and provide value and get investor sentiment positive in the rolling into quarter three. So that's how it looks right now. When we're looking at AI companies, they are in the space tech industry and most likely could be a top AI company in that industry. This next company is an innovator in what is robotics. They have some big contracts with some of the most notable department stores in the world, and they use AI with the robotics to streamline and save time for companies like Walmart or many others. So we're going to jump into it. So this is Symbotic stock. So we can go take a look at their website. So their market they're in is growing really fast, and we'll kind of get into the financials, but you can see they're doing the back end automation for Target, for Walmart, for Albertsons. You can see Unfi as well, United, what is it, Natural Foods, something like that. So they're working with these grocery stores to basically go behind the scenes, set up their robotics AI to automatically do the inventory for a supply chain or e-commerce, basically for these department stores. So a really big issue, obviously, if you have AI powering it, or you don't have AI, is you have one person trying to keep track of everything coming in and out of the department store, or you have one person or a bunch of people that are going to get the stuff so they can put it on the truck and get it sent out to a customer. But this company focuses on making the robotics handle the actual loading, because they have these like forklifts basically that are like robots that can go pick up the stuff in the warehouse and organize it. And then also they have AI for the actual inventory to increase the efficiency. So they're really building out kind of this neural network for what would normally be someone that would manage a bunch of employees to go make sure they're doing the deliveries and like getting the stuff and doing the inventory. They kind of do it from like a robot standpoint. They're like, all right, here's all the robots. These robots manage this, and You could see all your inventory and oh, you had a customer order online. Okay, like it's going to go and get it, kind of how Amazon works. And so Amazon has that own kind of tech inside of their warehouses, and they're going straight to some of the top players in the world to provide that service. So what we've seen with Symbotic, you can take a look at their financials. Again, they recently signed a $500 million contract with Walmart, and you can see their revenue per quarter is right around there, around $500 to $600 million per quarter. Their balance sheet is pretty good with $1.8 billion in assets, with about $1.3 billion in liabilities. So overall, we see them continue to build out their market cap. They're at $30 billion market cap, and potentially could be a 50 to $85 billion company, really, if they're continuing to work with the top players in the world to develop their robotic systems to streamline their transition to e-commerce or delivery services for those department stores. So that's why we have them here. When it comes to their technical analysis, we've seen them really run up recently. Last time we were kind of watching them, we were looking for this kind of 70% swing from about $37 up to about $64. And that's exactly what happened. We actually saw that 70-cent swing. And then we were kind of looking at this resistance here, seeing this sell down into this level. So it's recently sold back down, maybe a little overbought still when you kind of look at it. It's up there. So maybe looking for a pullback, but the long term looks really good. The near term looks a little more volatile. So kind of just the rising support level that we see play out with the company. They recently corrected from those highs. They're now kind of consolidating, and they've maybe found a top there. You can kind of see this resistance level, and then you have this support level. It's a previous resistance that is acting as a support, and you can see them kind of consolidate from left to right, where they're kind of going from left to right, seeing this pattern kick in, holding below that 200-day moving average, and maybe trying to continue that uptrend they had. But conservatively, maybe they could sell back down on this range. It would be a little bit better buy around $49. Somewhere in there. They're at 52 right now. So we're kind of looking for something like that. Maybe we get a sell down here, kind of look for a move like this, about 10 to 15%. Right now, margin for profit to previous highs looks good, but that's a little more aggressive. It's only offering about a 5 to 6% margin on that trade right there. So not anything I would personally take. We're looking for like 10 to 50% opportunities. So it's a little overextended at the moment as they've seen this surge kick in. But really, we're looking for a sell down. We'd like to see them sell down and monitor them closely. And I'll keep you guys up to date on the channel with the stock, and encourage you to, if you have thoughts on any of these companies, comment them down below. So we're going to watch there. The second company is not in robotics. They're not in space tech. They're not in defense. They're in the data centers for the AI companies. That company is going to be called APLD. They build those big buildings that they put a ton of computers into so that companies like Google or Apple or OpenAI can run ChatGPT. ChatGPT doesn't magically work. They have these big data centers that have a ton of computers in them, these GPU clusters, and APLD builds the data centers that hold all the computing power for companies like OpenAI or for CoreWeave. So you might say, okay, well, that seems like a pretty good market. How are they looking right now? What's the reason we got them on the list? Well, they're trying to use this previous resistance around $14 a share as a support level. And we kind of see them getting rejected there at $15. They recently pulled back on Friday, and we're going to see if they can hold that $14 range. They're trying to make pushes, either this 10% swing back up into about $15, or even really making moves up into this $25 range. You might say, that's a pretty big leap. How could they be a $25 stock? Well, that's where we kind of look at their developments. While they got big institutions putting some more investments into them, you got, if we take a look at NASDAQ, kind of jump on over to the institutional holdings. You got BlackRock that's investing in them, Vanguard's investing more, Goldman Sachs. So you see some investors jumping in. But really where we're looking is some recent deals. They build these data centers that focus on liquid cooling that they put in places like North Dakota where they're frigid winters, so they can save some money on cooling costs. And they go to wind turbines or hydroelectric, which is probably more common, say North Dakota, or solar. And they use those types of solutions to run the data centers. If you look at the different companies that they work with, you got Super Microcomputer, NVIDIA, Dell, and Intel, as well as Hewlett Packard. So big companies that are building data centers, they are going to APLD. In fact, they recently signed what is now a $11 billion deal. In this article, it says it's a $9 billion deal, I believe, or $7 billion, excuse me, with CoreWeave. So they're building this 15-year lease agreement here with an AI hyperscaler building these data centers. And that's what we see happening with APLD. And they're expected to get this out here by 2026, I believe it is. So financials look pretty good. You see just a $3.6 billion market cap. We see them start to maybe decline quarterly a little bit in the revenue over the last quarter, but we see them yearly kind of increasing their revenue pretty aggressively, up about 5% year over year. But the balance sheet is also where we see some increases in their assets up to nearly 2 billion, with their liabilities at 1.2 billion. So nothing bad. Liabilities are lower than their assets. We're just kind of watching to see if that big billion-dollar deals that are coming in with CoreWeave, for example, start to reflect in the balance sheet. The moment their revenue jumps to, let's say, $100 million in a quarter, this is easily going to be a $10 billion stock, which would put them into, what is that? Probably around $50 a share. So you kind of see why that target for the $25 range is there and why we could potentially see it. We've seen them get as high as $34 a share, but really conservatively, we're looking for this 10% swing right now into $15.50. And while the short term could be volatile, maybe we even see a sell down in that $9, $10 range, the long term is more what we're looking at here with this stock, but we like to trade it as we've been able to, and we're up about 48% on a recent trade there with APLD. And that brings us to number one. Number one is going to be AMD stock. They are building these Starlink satellites, Starlink satellite chips, I should say, not the Starlink satellites. And that means they're working with Starlink. But why are they an AI stock? Well, they're heavily focused on data centers. So we've seen them really start to build out their data centers and increase their revenue there. But we saw their revenue increase year over year and quarter over quarter. In fact, they were doubling their revenue, but still selling off for what was about a year or so. Through from $227, they sold off as low as $79 or something, or $76. And we continue to add to our positions there on AMD. We're up about 72% now. But really what we're looking for is, maybe a pullback down in this 165 range as they got up to 186. But overall, kind of seeing them as a top player. Definitely at one point, I would imagine they're going to reach all-time highs, if not in this run, in the next 18 months. And when we were looking at the short-term plays and why they're in AI, they recently acquired, while they got their data center revenue up, they acquired this AI software company called Brium. And that's a company that does very similar to OpenAI and ChatGPT. They have these large language models that they're running, and you got Brium versus SG Lang, which is what most companies run. And you can see on the left, this is Brium, and they're running on AMD GPUs. And so basically, AMD said, "Wow, that's really good software. You're building out some really good performance here on these large language models. So we're going to purchase you." So they bought the company Brium there as well. So not only are they a big competitor with NVIDIA, they're going to be one of the top players most likely in the near term, and they're in the same conversation with NVIDIA on trade export deals and things like that. You can see they're even doing a revenue sharing agreement with NVIDIA and AMD with the the U.S. And could that be a little bit strange? Possibly, maybe a little bit of constitutional conflict that we'll have to look at. But 15% of the chip sales for AMD come from China, selling to China. And so, really what they're looking at is potentially U.S. is trying to build more of a tariff on the China stuff, so China pays up more, and also that we are able to continue to build AI data centers and infrastructure in the U.S. Rather than other countries, and so it seems like that's going pretty well right now as the companies are working hand in hand together. So that's why they're number one, is because they just got a really good long-term future, AMD, for providing GPUs and data centers. That's why we got them there. So when it comes down to the growth of what we're seeing in AI and all the booms that are happening right now, there is so many different opportunities you could watch. You could look at quantum stocks. How do you trade the quantum computing market? How do you trade the space tech market? And even as you watch these opportunities, the most important thing is going to be that you have a plan. If you want to have a plan that's dialed in, every single day at market open, we go live and we're there at market open. You get to see my entries, see my exits, see how we trade. But ultimately, you get to learn the steps to investing in this AI boom that we're in. And if there was ever a time to learn how to invest in AI, right now is the time to how to identify these companies and know that they're creating emerging markets and that you're prepared so that you can profit from them. It's today. This is the day today to do it. And that's why, I created Stockmates. I love these companies. I like to watch them every day. We are always, there looking at these companies. And if you want access to these daily live sessions, this is ending this summer. You get the A to Z blueprint, technical and fundamental analysis. You get 8 hours of stock, crypto, and real estate lessons. You get some books that we put together there for you in Stockmate, and you get the community of like-minded investors. We've had some great testimonials right now. We got a special limited time offer just for this AI boom in this summer, where you can get a discount on Stockmate. You get all the value. You can select your plan. If you want to do quarterly, you can. Right now, you can get lifetime access to Stockmate, which is great because you don't have to pay a subscription. You get into our daily live sessions every single day, Monday through Friday, without having to pay a subscription, but that is going away soon. So if you want to grab it, again, it's the second link down below. One of the cool things is we'll send you a free t-shirt. The other cool thing that we got going on right now is the books that you get access to. So one of the really exciting books that we put together a while back, you can see the earnings that we come out with every single week. We always have earnings come out along with all the targets, so you can get those. But there's also this book here. I wrote it before ChatGPT, and you kind of get the full breakdown, but it's going over how to, what's the difference between the ordinary and the profitable, the difference in the plan versus what does a trading plan look like, no plan versus having a plan, ordinary mindset versus profitable. And if you want to know the difference, you want to know kind of not only that, but how to learn. How do you actually learn? Not just here's what you need to learn, but what's the best way to learn this stuff? Or what's an example of a trading plan? How do you do a trading plan? What is emotional IQ or the mindset? Emotional IQ is a big key for a lot of investors, and I go over kind of all the things you need to know to do trades and feel good about what you're doing. So when it comes to getting that book, you get it for free inside of Stockmate, and you also get our live trading along with the targets for the week. So if that's you, if you're looking at the AI market, the quantum market, the space tech markets right now, and you want to learn how to invest in them, I mean, it's basically a no-brainer to join Stockmate. It's basically the easiest way right now to get insights into those markets. Whether it's we're going to CES when the quantum market has announcements that come out and the market tanks, and we're saying, let's go get the real world info for you. And we go to the conference and then we get those insights. We talk with the executives that There's no public information out there. And I go to the conference, I get the information for you, and we can share it. Or it's going to the space tech conference, and learning about deals before they come out for companies like Black Sky. Actually, we were able to capitalize on Black Sky. We're up, 39% now, but this is a deal that we were able to find and identify this company early because we went to those conferences. And I share that a lot of times in Stockmate. And if there was ever, a time to do it, I would say Stockmate is going to be a no-brainer right now for you. So appreciate you all. If you want to join us there, again, it's the second link in the description, or you can go to cash2toassets.com/Stockmate, and it'll take you there. Thanks so much for joining. If I earned your thumbs up, hit the like button. Comment your thoughts down below on the markets in these companies you're looking at, what you think about them, and do consider subscribing. I'll see you guys in the next video. Take care.